Hi everyone, I hope you're all doing well, and today we're going to talk about DraftKings, a stock that I own, my biggest position in the stock market, and today we are going to talk about something that a short seller did about DraftKings yesterday. And that thing they did was actually tell a lie about DraftKings. Now, I don't mind people having different opinions about stocks or stocks that I own if it's all comes down to opinion and you're using facts to say that opinion, absolutely fine. You know, the stock market is a game of opinions. When you're buying a stock, there's going to be someone that's selling stock, and when you're selling stock, there's going to be someone buying a stock. But there's a line where if someone starts saying false information to support their case, which can be very common with short sellers, and it is allowed as well on a massive mainstream TV channel, I think that's the line where it's like, okay, I think we need to call that out slightly. On a side note, before I get stuck into the video, thank you so much for 12k subscribers. We just got above 12k subscribers yesterday, so thank you so much for you guys that have been here for a long time supporting the channel, that smash the like button every week, every video, and come in and check every video, I guess. It's crazy to think back when I started the channel 5-6 years ago now that we would get to this point of view. You know, my long ambition was always to see if I can get to a channel where there was a regular kind of maybe 50, 100 people that actually came in to watch the videos, and it's now even more past that, which is absolutely amazing. So thank you so much to you guys that do come out and check the videos as well. And also, the last little side topic. I honestly, DocuSign, did you see this yesterday? Look at this pre-market, down 31%. Wow, that's a massive drop. It's been a really good stock though the last kind of 2 years, but yeah, boom, that's a massive drop off right there. So might have a little look into that. I think I've got enough to be buying at the moment, but yeah, that's a crazy drop, and that's a 46 billion company as well. So yeah, crazy. Anyway, getting back onto the video, talk about DraftKings, my biggest position in the stock market. I'm a big fan of this one. Obviously, it's my biggest position, but I generally do think that this has a lot of potential in the next few years. I think it has so much potential than just being a sports betting and then iGaming, and even expanding past the US. I think it has a lot of potential going forward. And the crazy thing at the moment is the dip that it has been on. I mean, I don't know what it is, but in 3 months to lose half your value, I generally look at this and go, I mean, what has caused this? I mean, originally, there was a dip caused by that there were rumours to buy Entain. The Entain deal wasn't going to happen, and then boom, we've fallen off an absolutely crazy amount. And I'm looking and thinking, this company's put in fantastic financials this year, and we're down 50%. And I just, yeah, it's crazy. I am enjoying this and buying this, we'll put it this way. But anyway, getting on to today's video, which is about Jim Chanos. You might have heard of him. He is famously the one that shorted Tesla, and we know how that worked out for him. But Jim Chanos went on to CNBC and talked about some things, and one of the things that he talked about was he currently has a short position in Tesla. Now, Jim Chanos doesn't have a great track record. Just for example, if we just go on to Tesla, yeah, it's done very well, and it shows you that puts into context someone's history when they say that they are still short in Tesla. But even nowadays, I think it's probably time to admit defeat. Tesla was a very shorted stock. It didn't make profit, but everything was moving in the right direction. And I started buying this in 2019, and the stock through periods of 2019, as you can see, was down a fair amount. There's points where I was down back in 2019, and if any of you guys are following the channel since then, there was times where I was down like 20-30% on Tesla, and it happens in the stock market. But then boom, you look at the progress that it's made now, and it's been absolutely fantastic stock. So that's Jim Chanos for you. Anyway, it came out that he is shorting DraftKings. Now, I don't follow Jim Chanos, but then I thought, oh, I'll just have a quick read to see what he did say about it. And he basically came out saying the business model is flawed and trades with an excessive valuation. Now, he came out to say that the company currently trades at 30 times sales, which was like, hold on, this is not true. You're telling a lie here. This company does not trade at 30 times sales. And just to kind of put that into context, if we look here, if we go on Guru Focus, you can see that the price sales ratio as of today is actually 10. So I mean, I generally don't know how he has managed to get tripled the actual price to sales ratio, but hey, here we go. The actual average of DraftKings price sales ratio is normally around a 28, which is still below what he said, but it is currently at a 10. So I don't know where he got the excessive valuation from, because yeah, it has massively fallen off a cliff and is nowhere near that at the moment. And Jason Robbins, who is the CEO and founder of DraftKings, in case you didn't know, he's actually very good on Twitter. If you don't follow him on Twitter, it's probably worth it. He's very open about a lot of situations, and he does take obviously a bit of grief out there, and he gives as good as he gets. He really does give some really good replies, especially what's going on at the moment. And I think it's really good to see a CEO that is kind of this outspoken about situations. And he also came out with a tweet yesterday saying, "It appears Jim Chanos has forgotten how to do maths. He claims we are trading 30 times X revenue. Not even close, Jim." So yeah, and Jason Robbins is totally correct. We are massively off that. And also he goes on to talk about the business model, and the business model of DraftKings has been absolutely flawed. Once again, I generally don't know what he is talking about. The business model of DraftKings is absolutely fantastic. They have obviously just grown revenue at triple digits as well, which is absolutely fantastic. And especially to do that at the size of the business that it is, was great. But he also had a dig at marketing. He said that marketing costs are very high on the company. Now the thing is, what you got to remember with DraftKings is DraftKings at the moment is in a brand new space where it's been a lot of these iGaming, sports betting has been allowed in a lot of new states. What you've got to do, and if you're from the UK, you might be a bit more aware of this situation, is that when you launch in a new state, if you have a new state that comes online, you have all these people that are ready to get on sports betting or iGaming or anything like that. And when you've got the choice of going DraftKings, MGM, Flutter, FanDuel, when you're a new client, who are you going to sign up with? Well, you're going to go with the one that's probably got more market awareness out there. So if you think, oh, I want to go do some sports betting, I want to bet on the New England Patriots tonight. First of all, you need to go download an app. Which one are you going to download? You're going to probably download the one that the name that comes straight into your head is the one that you've seen advertising on the side of the NFL for the last kind of 2 years. It's the one that you see all the time. It's the one that your friends use. So you have to become the household name. You need to market. You need to put your branding out there so people go, online sports betting, I go to DraftKings for that. That's what you need to do. And so is that, what's the other thing they're going to consider? Well, if DraftKings have this offer where if I sign up and place $10, I get $100 in free bets, that's also the other thing that's going to tie you in. And then what happens there is that when you've kind of used that platform for a long period of time, you're probably going to stay with that platform and use it for basically the rest of your life if you're iGaming or sports betting, and you stay with that platform for the next 40, 50 years. So you need to get the customers in, and then when the customers stick there, then you basically then recoup what you put in to get them on the platform basically. And that's the big thing, is that you need to have good marketing to benefit in the long term. And with all these states coming online, you need these people to come in and be on your platform, not on someone else's platform. So the little cost of acquiring customers is a little high at the moment, but that doesn't mean the business model's flawed. Because what you do is, if you actually look into the company, if you do research in the company, you will realise that DraftKings, after 2 or 3 years, makes that money back and comes profitable. So if anyone actually looks into DraftKings, you realise that the longest state that they've had at the moment, which is New Jersey. New Jersey has been around now for, I think, coming up 3 years. And what has happened in New Jersey? After 2 years, New Jersey comes profitable. So the business model is not flawed. It's working spot on. Because if you look at New Jersey is now a state that still grows at 20 to 30% revenue growth and is profitable. So you start working that out on all these states that DraftKings are getting, they're all going to eventually turn profitable. And what we last heard as well is that a lot of these states at the moment that are starting to get to that 2 to 3 year operating time frame are following New Jersey and coming profitable. So there's a big thing here. What I like about this, especially with DraftKings, is that you hear a lot of business models or businesses saying, "Oh, this is what we would like to happen. This is what we hope will happen. This is hopefully how we get to profitability." The thing with DraftKings is that, yeah, sure, it's losing money at the moment. It has a few marketing costs. But when you look at the evidence of this is what I always like doing, is when I buy unprofitable companies, I've got to see how they can get to profitability. When you look at DraftKings, can it get to profitability? Yes. And it's not ifs and buts and when this happens. It is happening. There is evidence already in the company that what DraftKings do, their business plan of how they market and then get their profits further down the line, is happening with DraftKings. It's happening with New Jersey. It's happening with other states. The path to profitability exists in DraftKings because it's already happening. So once again, I'm very disappointed that, like I said, on a major news outlet like CNBC, someone was able to come on, and a stock that I'm invested in is then, you know, a lot of false information, a lot of false claims was allowed to be put out there. I think it's very unfair, and I think it's very unfair that CNBC allowed someone to come on here and put claims of that it's trading at 30 times revenue when it's clearly not, and that was allowed to happen. And you could argue, okay, that's more of an opinion that the business model is flawed, but that's me also coming out and saying that the evidence that we have there, the facts that we do have there, is that there is the path to profitability. I'd say that's probably not as clear as, you know, making false claims. You could say that's a bit more of opinion, and that's me saying a bit of a more of opinion. However, I'm using more facts in that, you know, the history of the progress of marketing, and that it does lead to profitability. But once again, I'm just a little bit frustrated that a short seller was allowed to have a mainstream platform like that and put them false claims out there, which is a little bit frustrating right now, especially with what's going on with the share price, I guess. So yeah, overall, that's what my thoughts on the short seller that came out to attack DraftKings on a mainstream TV channel. And just on a little side note before I do go on DraftKings, what is the one thing you like to see when your stock is going down? Insiders buying. And what is happening currently at DraftKings? The insider buying is starting to tick up a little bit right now, which says a lot about what's going on with that share price anyway. So hope you enjoyed this Friday video. Sorry about being a bit short again. Same again, I'm just not feeling great at the moment, so I don't want to do too long videos. But yeah, I hope the little video on DraftKings was useful anyway, guys. And I will see you all on Monday.